and IWM ended up actually closing the day flat despite the rate cut. So, a 0.25 cut would have been really bullish for IWM. This is a little scarier, right? This is are we going into a recession, or are we going to see a recession, official recession in the next few quarters? Because the pace of cuts, as projected and as realized, are faster than the market would like to see for a soft landing, right? This is far closer to a hard landing. We did fall a bit below 75 points of cuts projected for January, but we already got 50 points of that. S&P kind of touched the top end of the market makers expected move today, and then closed to the downside, well, pretty close to the downside expected move, which I think you can see here, that line. Very close to gamma neutral going into tomorrow. If gamma neutral slipped overnight, then the market maker will have to sell the increased vol going into market open, which could push us down towards monthly gamma neutral, and that could push us down towards monthly DN, which is not too far away from spot currently, and they are probably closer to spot as of tonight as well. ES managed to test 57.55, which is a little bit above where I had my resistance. Mine was, I think, down here in the 40s, so a little bit of a spike above. That failed. We fell back below the long-term trend, and we are getting a continuation of the failure at 56.81. Losing support here opens up the test at 56.61, and then we move into the more neutral range, where the next support is at 56.23. Dollar moved down sharply, then back up. We're probably just going to see a lot of repositioning on that before it picks a direction. People are not properly positioned. I would say overall dollar is going to fall. Rates are cut, right? Yields at the short end of the curve are going to drop precipitously, but some repositioning will occur before then. A little breakdown in dispersion and correlation on the 1 and 3 month, ultimately moving up into the end of the day, despite the initial sharp reversal on that rally that we got. This should continue to break down. Short vol is obviously way riskier here. Leverage should be reducing, and we should see a longer period of time where correlation stays elevated, which we haven't really seen since like 2022. But back here in 2022, correlation was significantly higher than it currently is, even at its lows. And as we kind of move out of this short vol environment, and yields at the front end turn down, yields at the back end turn up, we should see correlation rise to a median level that it's significantly higher than where it currently sits. This is kind of interesting. The short end of the carry staying under leverage, but the leverage at the top end of the carry rising rapidly following the rate decision today. We do see some reinversion of the yield curve, but not enough. We have the 10-year accelerating ahead of the 2, and we are seeing the forward yield on volatility pick up. It's about 100% higher than it was at close yesterday. As people go longer and longer bonds, the demand for long vol will increase. Definitely moved up today. And we'll probably see that track in line with the rising correlation. Skew, I would say we're probably going to see more tail risk hedging come online now that the Fed has made the more shocking of two possible decisions. 20-day moving average S&P got about 70%, 69.58%. And this is also something to pay attention to. Out on the weekly, correlation between VIX, cash VIX staying pretty elevated, kind of increasing week over week over the last 3 weeks. But more importantly, out here on the 1 day, we've seen, since our big spike in VIX with the Japan rate hike, we've seen correlation kind of trim down as the spread kind of widens there and more short vol came online. As of Monday, we've been seeing that start to reverse. So some of that short vol positioning starting to fall off, and they're getting shaken out or scared out. So something to pay attention to, especially if this moves back up towards 100% over the next couple of days. We may see kind of another big spike in volatility. That's about it. So I'll have Pickles picks out tonight, and I'll see you guys tomorrow morning. Japan rate decision comes after tomorrow, so tomorrow might be kind of choppy, flat, and then Friday we might get a big move pre-market. We also have jobs data tomorrow, so that could have some effect in the morning, depending on if it's like really bad, that might have an outsized effect. If it's over, like way over or way better than projections. I would say it's I mean, it's just jobless claims, so it's like weekly, right? It's probably hasn't moved a ton, but if it has, it may freak some people out. Thanks, Black Shirt Gang. Your black shirt saved the market, I guess. All right, guys. Thank you so much. I'll see you bright and early tomorrow. Have a good night, everyone. Later.